Good afternoon, everybody. I'd like to take a quick moment and thank everybody for attending our panel today. Our panel is the Crypto Survival Handbook and a subheading of Finding Your Community. On our panel, we have a very diverse group of people. We have venture capital. We also have an individual who is direct in the weeds of managing communities and DAOs in that respect. So from this panel, my hopes is that we are going to share with you perspectives as to the key identifiers, the things that you should look for when looking at projects, what the experts think of or what they look for when they're identifying projects, and how to otherwise ensure that you are joining the community that is right for you, or you're joining the ecosystem that is right for you, should I say. So real quickly, we will go around and give introductions, and then we're going to go ahead and get started. So Andrew, how about we start with you?
Hey, everybody. Jared, thanks for having me. I'm head of Republic Crypto. We're a digital merchant bank, secondary marketplace, and primary issuance platform. So we sit kind of at the confluence of retail and institutions. We have a series of venture funds that we run, that I'm GP of, advisory services, tokenization platform, token sale platform, infrastructure.
Yeah, so I'm Hazel. I'm the chief of staff from Shima Capital. We are a crypto native 180 million fund. So what I do every day is more like supporting all our 180 portfolio companies on their growth, their strategies, and how they survive during this bear market. So looking forward to the discussion today.
Hi, I'm Ashley. I work in the DAO space. I am a core contributor and operator of a Venture Studio DAO in addition to a social meta DAO that exists in 4 markets, and I build crypto and non-crypto native communities online.
My name is Jared Winn once again. I am the founder of Winn Solutions, and as well previously was a former vice president at Binance, now working in the scope of advisory and assisting projects in scaling issues and ultimately helping them to overcome the many barriers related to marketing that's associated with that of crypto. So in that respect, we will go ahead and get started now. The first thing that I would like for us to talk about is the identifying traits. As a VC, for example, pitched every day on various projects. As a retail investor, many of us look at projects every day, and it's up to us to do the research and identify whether or not we feel a project is suitable for our investment, or whether or not we want to participate in that ecosystem or even utilize the platform from that stance. So I would love to go kind of from left to right here and hear from Andrew and then move over as to what are some of the things that you look for in a project to determine whether, 1, it's worth your time, or 2, it's worth your investment.
Yeah, I think first and foremost, this is not financial advice, and I'm not a financial advisor.
Everything on this panel is not financial advice.
Yes, be very clear about that. I think the most common bifurcation we see when projects come to us, and we saw 236 projects last month. We have a pretty hefty amount of deal flow on our side because of all the different services and funds and things that we provide. But the most common initial bifurcation is whether or not the project actually needs a token. Like 90% of the time, it's not. We have a series of leading questions that we use to kind of dig that out. Because ultimately, if the token is not really required, it's more of either a marketing play or you're trying to add some type of flavor in order to raise more capital. And that's very, very, very common. Very common. The second bifurcation, honestly, on the investment side that we see is people failing background checks. It's the number of people that fail background checks would blow your mind.
What are some reasons that someone might fail a background check?
Because the space is opportunists. The industry in of itself is based on opportunists. That's why you see a lot of overlaps with other opportunist industries, like crypto industry and people in the blockchain space often overlap with the marijuana industry as an example, right? Because that's also an area of opportunists. So opportunists, especially in the early stages, always can bring out nefarious actors because they think that they can do something relatively quickly. So you see a lot of people with bad financial crime history or identity changes, or it's wild, truly wild, yeah.
I love how you also reference opportunists, and I haven't heard that word used, and it's a perfect description of what this industry is. Oftentimes, people are chasing that early cycle. They're looking for that thing that's otherwise going to be, I was first to Facebook, I was first to Tesla, I was first to these things. And crypto is definitely one of those industries where everybody wants to be early, and they're just trying to find a reason to build something within it versus actually building a real use case is what I find as well. So thank you, Andrew. Hazel, would love to hear from you.
Yeah, for me, I think there are a lot of things. We have like a whole template of the due diligence demo and memo and everything. But for me, I think the most of things we look for is, in terms of the team, we want to see a good execution. If they promise they will be delivering something in 3 months, whether they are doing it, whether they are on track, we ask for a lot of details. How many people are they hiring? Who are they hiring? And what's their hiring plan? Whether it makes sense to match their implementation plan, and also whether they have active communication with the community if they actually deliver the things they promise to the community. We do think this shows a long-term execution capability from a team, which is one of the most important part when we do a pre-seed or seed round investment. Honestly speaking, probably 20 or 30% of our portfolio companies has already pivot of their business model. They figure out something else is more interesting to build, but the execution capability of the team will last long. So that's the reason why we invest in the team. We invest in their future potentials. Probably they will just pivot somewhere else, but we know that the market changes a lot, but the team's execution capability won't change.
Absolutely, and consistency is something in such a volatile industry as what we're in. Consistency is definitely a diamond in the rough in many ways. And I like how you spoke as well about the communications with community, right? And just follow through. Follow through is something when what you're essentially trading in terms of value is trust. We're in a trustless ecosystem in many ways, but trust is something that could be easily damaged and take a long time to restore, if ever, in that case. So I think that really segues well into you with your role in community and so forth. I would love to hear from you about how important, what is the value that you put in trust and follow through and execution? How does that tie in for you? Because while you might not be necessarily at the scale of getting all these business pitches, you do run a fund and so forth. I'd love to hear about that, but I also would love to hear more about how you enforce trust and how you otherwise ensure that that's stable.
Yeah, from my perspective as a community builder and a community leader, I am not writing checks. I'm giving my time. That's the resource that I have to give to these communities. And so I determine what's worth my time. The first thing that I look at that I don't think is much different from a VC is founder product fit. Is the person who started this community and is the de facto leader of this community aligned with what this community is doing, right? And then I think about the saying that I heard a while ago, people like us act like this. And so I think, okay, is this aligned with who I am, and do all of these people act, you don't have to be monolithic, right? But do all of these people actually have something in common beyond wanting to have a financial gain, especially if it's a tokenized community? Are we there to collect the tokens and then dump them a couple of months later? Or are people really built into the mission and are thinking 5 years from now, 10 years from now? And then I also really look to see whether or not people, this seems simple, but whether you hang out together outside of community events. Are people organizing on their own? That's a really good sign to me that you're pulling people together. There's a gravity that brings everyone together that's genuine.
And genuity, that in itself, you really can't buy passion. You can incentivize it. Obviously, people are incentivized by crypto for their own reasons. It wouldn't exist if there weren't reasons for people to participate. But as you're saying, that passion is something that cannot be bought. You really have to find those individuals that can carry the torch, right?
Yeah, I think especially in the crypto community space, now I look for communities that are not yet tokenized, because that at least tells me that the people who have signed up for that community do not have financial gain at the front of mind. When I first came into this space, I was looking at tokenized communities because I came from the space as like a swing trader, and it was the social tokens that were of most interest to me. But then when I really started to think about how that plays into the health of the DAO and the health of the organization, it actually really complicates the motives of individuals within the community.
And how do you see that a DAO operates? How do you see a DAO with its community different than a project that is not a DAO per se? How do you see the changes in that? And do you see more passion when it comes to something of a DAO? Like, what are the main changes you see in that?
I think DAO is just like a buzz term for a concept. I was actually having this conversation this morning about the Colorado co-op law and why more DAOs are not wrapped legally as co-ops. Like, the laws are right there, they kind of fit what's going on. And so I think that there are ways that communities are operating like a DAO without calling themselves that. And so, sorry, I'm like losing what your question was.
I think you're on point with it.
Okay.
It's good. What I'd like to do now is I feel that the best way a lot of people learn, there's different ways people learn, and for me, storytelling is a really great way to not only get a point across, but learn a little bit more about the person. So I would love to hear from everybody just maybe a bit of an example or a bit of a story of maybe a pitch you received from a project or something of that, and what was it about that project that you just knew that this was going to be a gold star, and how did that go? How did that prevail, and did they meet those expectations? Andrew, how about we start with you?
I think one that would really jumped at us are probably two, because we were early advisors to both Algorand and Avalanche. And I'd known Silvio from MIT when he was working on zero knowledge proofs, and when he started to put together this concept of Algorand, and on this in the back of the Teal, which is a relatively difficult programming language. Then almost in parallel to that, you had Emin who's a professor at Cornell, rolling out Avalanche. So there's this series of like professor coins that kind of came out around the same time. There's a handful of them, not just those two. Those two that we were particularly close to and that we worked on from very early stages just had so much mental bandwidth behind them, more so than like anybody else, right? And they weren't really, Silvio's
What do you
not a
mean by
market.
mental bandwidth specifically?
I mean, you're talking about two brilliant cryptography minds and distributed system minds that were looking at rolling out like a tech solution based off what they had built in their brain, right? And this was the first time that they had the ability to really do that, and they could leverage blockchain tech to make that happen. So those are super, super interesting to us, like right out of the gate. And they didn't have business people, right? Like Silvio's not a business guy, Emin's not really a business guy. They're like heavily technically driven first and foremost, and then they brought on business people later, right? And so you have like John Woo came on to help run Avalanche. He's like an insane president, probably one of the best presidents of all on all the chains. And Algorand brought a whole suite of like suits basically on board to drive Algorand, and those are particularly interesting to us because of the technical nature of how they started and just the extreme academic layer that they were built on.
Well, you actually hit a good point, and there's plenty of brilliant minds in crypto. I mean, a lot of the founders and so forth are very brilliant. What I find lacks sometimes is the link between brilliancy and execution. So there's lots of grandiose visions, lots of pie in the sky. We are going to change the world. We're going to do all of this, and then 3 years later, nothing has happened. Right?
Yeah, because there's plenty of idea guys and girls. Like
Exactly.
Ideas are very cheap.
How do you weed that out? What did, say, Avalanche, for example, or the other, what did they do to instill in you the confidence that it wasn't just a grandiose vision and they had the competency to actually execute?
Yeah, I mean, so this was kind of before the time of like the napkin white paper, right? It's like shortly after that, there was like a series of like napkin pitches, basically, right? Where like people would come to you with this idea and pitch it to you, and it was completely vaporware. There was nothing. Like, for those two projects, like they were building those concepts like on an academic level, like well before then. And so they came with something. It was not nothing, right? And had been like teaching on those topics, educating on those topics, building communities basically from an educational standpoint on those topics. So that was very, very different than what you saw from, I won't name other chains, but like other chains that came around that time.
I remember when you and I first started working together when I was at Binance, Andrew, when you talk to somebody, usually pretty quickly you can size up whether or not somebody's talk or whether or not they're going to take action. And I think it's a really quick demonstration of how do they follow up, how do they, do they follow their timelines, do they execute, and so forth. So I think that's, for me, that's a really big thing is do they do what they say and say what they do, right? And there's track records. You said background checks previously. That is something where you can look at the history. I think the team is really one of the core critical components. A vision is a vision, but the team itself needs to bring it to life. So thank you for that, Andrew. And Hazel, would love to hear from you.
Yeah, for me, I think probably echoes the point of deliver actually what they're talking about. But another part is like, there's a project we were working with very closely. It's called Spies Finance. We invested probably...
Can you repeat that? It cut for a second. It's called
Spies Finance.
Spies Finance.
Yes, so it's an NFT liquidity aggregator. It's pretty impressive in working with the team. So the team was coming from like two founders are coming from pure products and engineer backgrounds. And so they need help in terms of marketing and strategy, go-to-market, everything. So for our first meeting, I was saying that, you can think of your go-to-market strategy by these few key questions. You need to have a clear answer on these few key questions, and you can use this template, like Excel template, to get charts to like just plan out your next 3-month activities. Next week, build the things coming up. And it's like exactly listing out what we were talking about, and they actually put in a lot of thoughts on, we need 2 weeks on this, 3 weeks on that, we need this resource on this, that resource on that. You can clearly see they are intaking all your advice and they're doing their own research and they're thinking. And then 2 weeks later, Bill, the website comes out. And then 3 weeks later, Bill, I was like, how many people, how many email address do you have right now? In 1 minute, they get me the number, they get me the open rates, they get me, we think in the next month, our NFT sale, we should have this few hundred NFT drop. We should be able to sell it in an hour. This is our pricing and the reason behind all the data. You know that this team is putting everything together, and they're actually taking in all the advice. And I think this is something, from a community member perspective, they can also tell that this team is doing their work. And we can also, from our investor side, we can tell that, this team has a great potential. And potentially next round, we will invest even more. So I think that's a great part that I have been putting a lot of time looking in to see if we do want to do any follow-on investment later on.
I think that's a really great point that you made. I think listening is such a core skill, and coachability is another core skill that I look for personally when integrating or interfacing with anybody that I'm collaborating with, doing work with. And I at one time, this person isn't here, I had an interview with somebody, and it was the worst interview that I had ever experienced in my life. This guy had literally told me that he enjoyed being on unemployment for the last 6 months because he was able to play basketball every day, and it was the best time of his life. And I was like, wow, that was the worst response to an interview question that I've ever heard, right? And so we went through the whole interview, and I said, look, I'll be honest, this interview was really bad. Like, you told me a few things, telling me that you enjoy being on unemployment as a boss. That tells me that maybe you're not motivated. It tells me this and that. And he's like, wow, I did not intend to be that, or for that to come off that way. And in short, he was coachable. And I hired him, and he ended up being my best employee that I've hired to this date. So the project, it might not be where it is, but the fact that they'll listen and the fact that they don't know it all, and my employees are laughing in the front row because they know who I'm talking about, the ability to actually listen and then implement and execute is really important, and I think that you hit those points very well on that. Would love to hear from you, Ashley.
Sure. So this is going to sound like it goes against my original point about tokenized communities. But when I first joined my social DAO, we were very local. It was based in Miami. And in less than a year's time, we became a meta DAO that had these 4 sub DAOs in 4 different markets. And so when I came on, the indicator to me early on that we were onto something, and this was going to be something that spread really quickly, even though I couldn't see the full vision yet, was the AMM, the automated market maker, which at the time for us was Uniswap, was telling me that the demand for what we were creating as a community was beyond what I could understand. I mean, I bought in at $1.50, and by 6 weeks later, our token had almost hit $12 And that was off of just the demand of people wanting to be in our community, and that led us to go to the next city, and then we watched that happen in the next city, and so that took us to another city. And so in that sense, having the token did make that clear for me. That was my indicator of whether or not it would be wildly successful. Yeah, that's kind of how I knew early on.
Well, passion, it really can be contagious. And you mentioned about tokens and so forth. I personally think communities themselves exist and thrive without tokens, but I feel like tokens in a way can kind of be the glue to a community. In short, it puts everybody on the same boat ride is the way that I see it, right?
Well, it's collective economics, so that can very much be empowering. I mean, the flip side of like potentially joining a community from a money motivation is that if we are now all co-owners, however we choose to define owner, but if we're all co-owners of this treasury and co-owners of this ship that we're all on, I think that really gels the community in a way where if there isn't an economic factor underlying, it might not have the same impact.
That's very fair. Thank you for that. All right, so we have a couple minutes left here. What I would like to do at this point is maybe we could just give some takeaways. If we could give one bit of advice to our listeners or our audience today as to if you're finding your community, what is one important thing that you would give as a piece of advice to anybody that's making that decision? And Andrew, let's start with you.
If you're starting a community,
If you're finding your community or you're looking for a community or you're something to participate in and identifying that, what's any bit of advice or any takeaway you would give?
Yeah, I mean, I think if you're an individual and you're looking for like a community, if your primary motivation is financial, just know that relationship will always be transactional from the very start. And the people that you associate with will be transactional, and the people that they associate with and that is the people that you're going to be around. So when you're looking for a community, that's okay too. Like you might be all right with that. Like you might want that type of relationship. I'm not saying that that's bad, but if it's a transactional environment and you go into it expecting something else, you're going to have a bad time.
Very true.
Yeah, I would add on Andrew with that if you're actually looking for belongings, sense of belongings, just look whether the team themselves are passionate, whether the founder, the founding team, or the community managers, they're actually putting their effort into communicating with the community, whether they are passionate about their projects, whether they're actually spending time working on what they're talking about, will be very important if you are looking for a long-term community to grow together.
Thank you.
Yeah, you brought up a really good point about communication. For me, it's not different from shopping. If I walk in a store, after a certain amount of time, if no one has greeted me, I'm going to conclude that you don't want my money. Like, if I go to a bar and you don't even, like, put a napkin in front of me and be like, I'll be right back, I'm going to, I have to help someone, I'm coming. Like, that sort of initial acknowledgement, that initial experience of coming in is really my first indicator of whether or not a community is for me. And then again, beyond that, whether or not I want to hang out with these people outside of the confounds of what this community is supposed to be. But I love your point about transactional communities, especially these crypto-based communities, especially tokenized communities. Again, like collective economics is very, very, very empowering. It's very powerful, but it also leads to situations where you are entering transactional communities with transactional people who ultimately, DAOs are companies with an asterisk. Ultimately, they're looking to sell. Ultimately, they want a VC to come in and like buy up their treasury. Like it's not all just good vibes. And so I think that you really have to like the people that you're around.
Definitely test the waters, right? And use your intuition. If it feels right, if it feels like your community, you're quickly going to identify that. If it doesn't, don't force the fit, right? I want to thank everybody for listening to our panel today. Again, my name's been Jared. We have Andrew, Hazel, and Ashley. Thank you for listening to us. It's been a great audience.
Thank you.